Hi, I'm SYAHIRAH NATASHA binti Muhammad and my matric number is 1202405.
My name is AINA INSYIRAH binti RUSMADI and my matric number is 1202379.
My name is IFAAULMILLAH binti Muhammad Nasir, number matric 1202397.
My name is NAJAH binti KHAIRUDIN. My matric number is 1202369.
According to Organization of the Islamic Conference (OIC), Islamic banking can be defined as the company which carries Islamic banking business. So, Islamic banking business is banking activities based on Islamic law Sharia, and it follows the Sharia called fiqh muamalat, which is Islamic rules on transactions. The rules and practices of fiqh muamalat came from the Quran and the Sunnah and other secondary sources of Islamic law such as ijma', qiyas and ijtihad. In Section 2 Islamic Banking Act 1983 state that Islamic banking business mean banking business whose aims and operations do not involve any element which is not approved by the religion of Islam. General objectives. First, to implement the economic and financial principles of Islam in the banking industry. Second, to spread economic prosperity within the framework of Islam. Third, to create an efficient, progressive and comprehensive Islamic financial system that contributes significantly to the effectiveness and efficiency of the Malaysian financial sector while meeting the economic needs of the nation. In Malaysia, the Islamic banking system exists side by side with the conventional banking system. In 1993, commercial banks, merchant banks, and finance companies began to offer Islamic banking products and services under the Islamic banking scheme IBS Banks. In September 1963, Perbadanan Wang Simpanan Bakal Haji (PWSBH) was established for Muslims to save for their Hajj. In 1983, Bank Islam Malaysia Berhad (BIMB) was established, the first Islamic bank in Malaysia. So the objective is to provide banking facilities and service to Malaysians in accordance to Islamic commercial law.
Did you know that Malaysians apply dual banking system? The effect we have three types of banking: conventional banking, full-fledged Islamic banking, and conventional bank operating Islamic banking window under the Islamic banking scheme (IBS). Full-fledged Islamic bank refer to a bank that only offering Islamic banking product or services. Example for local bank like Bank Islam Malaysia Berhad and Bank Muamalat Malaysia Berhad. Example for foreign bank like Kuwait Finance House Malaysia Berhad and Al-Rajahi Banking and Investment Corps. Islamic banking window refer to a conventional bank that offer Islamic banking product or services using their existing infrastructure like staff and branches. Example like commercial bank, merchant bank, discount house and development finance institution (DFI) that offering Islamic banking service. Commercial bank that offer service to the general public and to companies, function accepting deposit, advancing loan, credit creation and agency function. Example, Public Bank Berhad and M-Bank Malaysia Berhad. Merchant bank, a bank that dealing in commercial loan and investment. Example, Alliance Merchant Bank Berhad and Afin Merchant Bank Berhad. Development Financial Institution (DFI) offering Islamic banking service, play role in financing private and public sector investment, provide risk capital for economic development project on a non-commercial basis. Example, Bank Pertanian Malaysia and Bank Simpanan Nasional. Discount house, a company that buy and sell bill of exchange, generally perform on a larger scale with transactions that also include government bonds and treasury bills. Example, Abrar Discount Berhad in Malaysia Discount Berhad. Liberalization Islamic banking and finance. First, ethical and equitable. Second, comparable to mainstream banking product. Governance body, local like Bank Negara Malaysia and Security Commission. International like Islamic Financial Service Board IFSB and the Accounting and Auditing Organization for Islamic Financial Institution AAOIFI. Why Islamic banking? As Islamic worldview different from Western worldview, provide comprehensive solution include all aspects of life. Human effort is not completely value-free, and free interest payment is necessary in Islamic countries. Sharia principle prohibitions: riba, which is interest, maisi, which is gambling, and gharar, which is uncertainty.
The first prohibition is riba, which means interest or usury. Literal meaning of riba is increase, excess, addition, and growth. While in Sharia, it means riba is a premium that must be paid by borrowers as a condition for the loan or an extension in its maturity. Riba is also known as every excess in return of which no reward or equivalent counter value is paid. Or, riba is also known as a predetermined excess or surplus over and above the loan received by the creditor conditionally in relation to specified time period. Riba is also known as a forced increase of value in the medium of exchange that is loaned. In Surah Al-Baqarah ayah 275, it says, Allah has made trade lawful and forbidden interest, riba. Two types of riba, which is loans and trade. Loans riba is also called as riba an-nasiyah, which is interest for delayed payments. Meanwhile, trade riba is also called as riba al-fadil, which is interest on excess in counter value. Riba an-nasiyah is also known as riba al-duyun, riba al-jali, riba al-mubashir, and riba al-jahiliyah. Meanwhile, riba al-fadil, known as riba al-buyu, riba ghair al-mubashir, and riba al-qafi. Is riba related to inflation? First, we need to know what is inflation. Inflation means there is continuous rise in prices. In this video, I will illustrate how riba and inflation related. One day, Yato loaned 300 ringgit to Hebom. Hebom must pay back in 12 months. However, during that time, the prices of goods have increased by 10%. This shows that there is inflation. Hence, the value of that 300 ringgit will be worth less to Yato. In such case, can Yato charge an excess or premium to take into account the loss of value of money? According to Islamic law, it is forbidden for Yato to charge an excess because that is riba. Although it is unfortunate that Yato has lost some value, this is not Hebom's fault. Hence, Hebom should not be burdened with this excess. Is there a difference between riba and profit? Yes. By definition, riba means charge on money, meanwhile profit means earned from sale. Riba is also prefix. Hence, there is no uncertainty on the part of either the givers or takers of loans, while profit is post-determined. Hence, its amount is not known until the activity is done. Riba also must always be positive. Meanwhile, profit can be positive, zero, or even negative. From Sharia point of view, riba is haram, meanwhile profit is halal. Rationale for prohibition of riba. The first one is there is element of exploitation in financing consumption. The rich is able to generate more without exerting much effort. Second, riba inconsistent with Islamic view on debt. Incurring debt and interest is discouraged. Third, it have negative effects on credit society. It cultivates a materialistic society and make the creditor as controller while customer is enslaved. Fourth, it have the element of injustice in financing productive activities. Contract done with unequal counter value and injustice to debtor, as they are obligated to pay even there is no profit or loss.
Okay, next, MOHD. What is MOHD? MOHD is literally a speculation or gambling. The definition of MOHD is easily obtaining something without effort, acquisition, and wealth by chance. Okay, MOHD is prohibited in Islamic banking. It is haram. Why it is haram? Because money should be earned by way of work and effort, example knowledge, not by mere pure chance. Gambling include any activity where a person pays something of value for the chance to win a prize. When someone gambles, it involves three things. The first one is prize, the second one is consideration, and the third one is pure chance. Gharar. The definition of gharar. Literally, gharar is deceit, fraud, uncertainty, risk or hazard that might lead to destruction of loss. In Islamic dictionary, gharar is sale of what is not present. The definition of gharar in Islamic banking is the uncertainty that is present in the basic elements of an agreement, its wording, subject matter, consideration and the liabilities. An agreement that has any elements of gharar which is not valid for Sharia point of view. Gharar is generally prohibited under Islam because there are a set of strict rules in Islamic finance against transactions that are highly uncertain or that may cause any injustice or deceit against any of the parties. Okay, the justification and guidance for forbidding contracts or transactions considered as gharar come from the hadith, a revered book in Islam. It contains the sayings of the Prophet Muhammad who spoke against the selling of the birds in the sky, the fish in the water, or the unborn calf in the mother's womb, saying, "Sell not what is not with you." Therefore, questions of gharar arise when a claim of ownership is unclear or suspicious. So, this is an element which must be avoided in Islamic banking. Dealings as excessive gharar may make the contract null and void. Okay, the rationale behind the prohibition of gharar is to ensure full consent and satisfaction of the parties in the contract, and to protect against unexpected losses and the possible disagreements regarding qualities or incompleteness of information. Comparison between Islamic bank and conventional bank. Okay, in this slide, you can see the differences between Islamic and conventional bank. So, there have 6 main differences. Okay, the first one is principle. For Islamic banking, Islamic banks follow the principle of Sharia given by Allah Almighty to perform operations and activities. For conventional banks follow man-made principles to perform operations and activities. Next is source of earnings. Profit, service charge and consultancy fee is the main source of earnings for Islamic banks. Profit is variable which may be negative in case of loss. Okay, interest is the main source of income for conventional banks that is charged on different types of loans or products. Different between interest charged from borrowers and paid to depositor. It assures a predetermined rate of interest. Risk sharing. For Islamic bank, risk is shared among borrower, lender and the bank. But for the conventional bank, risk is fully transferred to others. Profit maximization. For Islamic bank, it aims at maximizing the profit but subject to principle of Sharia. But for conventional bank, it aims at maximizing the profit without any restriction, even at the cost of other stakeholders. Okay, for objective, the objective of Islamic bank is to work as a trading concern to generate its income. But for conventional bank, it generates income as financial intermediary. Its prime goal is the maximization of stakeholders' value at any cost. Last but not least is nature of earnings. Islamic bank, the income of Islamic banks varies depending upon business borrowers and environment. It may be negative in case of loss, but for conventional bank, the income of conventional bank is constant even if business borrowers suffer from loss because it charges fixed rate of interest irrespective of profit value.
Did you know Islamic Financial Services Board is an international standard-setting organization? The function is to promote and enhance the soundness and stability of the Islamic financial services industry and to conduct research and coordinate initiatives on industry-related issues. Did you know Islamic Banking and Finance Institute Malaysia is a lifelong learning institution which specializes in industry technical certifications? Its function is to act as a training center to develop human talent in Islamic financial sector and to provide total solution to its client through a comprehensive range of interrelated service which include business consultancy and Sharia advisory in Islamic banking, takaful, Islamic money and capital markets.
Association of Islamic Banking and Financial Institutions Malaysia is a dynamic, visible, responsive and effective organisation representing the voice of Islamic finance industry, underpinning the value-based intermediation trust in serving the community. The function of this association are to promote sound Islamic banking system and practice in Malaysia, represent interests of members locally and abroad, provide advice and assistance to members pertinent to the development of Islamic banking and finance at a local, regional and global level, to coordinate human capital development initiative for members, and the last one is to promote public awareness. An auditing organisation for Islamic financial institution is an Islamic international non-for-profit corporate body that prepares accounting, auditing, governance, ethics and Sharia standards for Islamic financial institution and the industry. The mission of this organisation is to standardization and harmonization of international Islamic finance practice and financial reporting in accordance to Sharia. And the vision of this organisation are to provide IF's markets, operation and financial reporting on Sharia principles and rules, and to provide IF markets with standards and guidelines that can support the growth of the industry. So as you can see, this is Islamic banking instruments. So we have mudarabah, wadi'ah, musyarakah, murabahah, ijarah, bai bitaman ajil, wakalah, qardul hasan, bai al-inah, hibah, as-salam, ar-rahnu, al-hiwalah and al-dain.
Okay, so Bank Negara Malaysia defines BBA as deferred payment sale whereby the property requested by the client is bought by the financier, who subsequently sells the good to the client as an agreed price, including a markup profit for the Islamic bank. The selling price is fixed and agreed by both parties and will remain unchanged until the end of the payment period. The ownership of the property purchase will be under the claim of the financier and will be handed over to the customer upon full payment. Next, agreement for BBA financing facility. The first one, we have the property purchase agreement PPA. So the Islamic bank purchased the property from the purchaser at the purchase price, which usually the amount of financial facility required by the purchaser. The second one is the property sale agreement PSA. The customer undertake and guarantee to repurchase of the finance property for the Islamic bank at the agreed selling price between the Islamic bank and the purchaser.
Case law, Bank Islam Berhad Malaysia and Azhari Mat Ali. Case involved a purchase of land together with a bungalow house to be constructed on the land between BINTI, the plaintiff, and Azhari, the defendant. In this case, Azhari purchase of land together with a bungalow house to be constructed on the land through BBA facility of BINTI. The purchase of land together with a bungalow house to be constructed on the land was Malaysian ringgit 123,235.65. Through the property sale agreement, Azhari was required by the BINB to pay the selling price of Malaysian ringgit 305,284.80 to Islamic Bank in monthly installment until full settlement. According to Azhari, the BBA so entered was an illegal transaction under Islamic law, as it involved a non-exacting housing unit at that time when the agreement was signed. Thus, Azhari refused to pay the settled monthly installment repayment to the BINB. BINB took a legal action against Azhari and withdrew the facility, and also demanded to Azhari to pay the balance sale price payable amount 282,445.1. According to Azhari, the progressive payment made by the BINB to the contractor were not supported with the architect certificate indicating due to completion of the purported progressive construction work. Azhari also claimed that his house was in bad condition, no fence or door, no sewerage system, and had incomplete electrical wiring system. This situation indicated that Azhari had withdrawn money without making detailed examination. BINB claimed that if Azhari examination were conducted, the defect and the damage would have been known by him. Azhari also claimed he had spent additional money to complete the construction of the house, as the house built did not have a certificate of fitness for occupation, and therefore the house was unsafe and not suitable for occupation. The issue before the court are as follows. First, Albert Property Sale Purchase and Agreement based on BBA, which is Property Purchase Agreement, and Property Sale Agreement, principal, valid and bind Azhari. Second, are there any breach of contract by the Azhari? Third, did the BINB act in accordance with the term of the PPA and PSA in financing the construction of the bungalow, or otherwise had the BINB contravened the terms?
The court ruled that the BBA's financing contract was valid and binding on the defendant, as there was no evidence indicating that there were any elements of fraud, coercion, or an undue influence during the signing of the BBA agreement. The court also ruled that Azhari had breached the terms of the agreed BBA contract on issues to the repayment of the facility to the bank when he failed to make the repayment of the fixed monthly installment to the bank. According to the court, Clause 18 of the construction contract architect certificate is to confirm that the construction work has been fully completed, and any complaints on the defect of such construction shall be made known by the defendant within 6 months of the delivery of vacant possession of the bungalow held by the contractor. This clause does not specifically refer to the method of issuing progressive stage payments to the contractor. Therefore, the defendant's claim that the architect certificate is required for each progressive payment is unreasonable. In conclusion, the court ruled that bank had acted in accordance with the terms of the sale of the property and the BBA. The court also found that the claim of Azhari's loss was not supported by evidence. Thus, the court rejected the Azhari's counterclaim and allowed the bank claim with no order for cause.